Imagine investing in a company that in just a few years delivered nearly 100x returns. It was hailed as a textbook long term winner, backed by marquee investors and widely regarded as a model of consistent growth. For a time, it seemed unstoppable. But then the story changed. In just a few years, this market leader saw its stock price fall by more than 70% from its peak, leaving the investors and analysts asking, what went wrong? Hey folks, see Rachana Ranade here, and I welcome you all to a super duper interesting case study based video on Relaxo Footwear Ltd. Now you might be like, Rachana, why all of a sudden video on this stock? Because something caught my attention. And what is that? Let me show you the chart for Relaxo. Now if you see here, from its inception back in 2011 to somewhere around November 2021, inception as in I should say its listing to the all-time high that it reached November 2021, this stock price saw a surge of almost 100x, right from what 14-15 rupees to the top price of almost 1400 rupees. That's a 100x surge, right? And from there the stock corrected by more than 70% is what you can easily see, right? So in today's video, we're going to try and understand what led to this massive rally. We are also going to understand what led to this fall, but something more caught my attention. And what is that? For that, let me just help you focus on the volume bars. Now, if you see here, this is like right from its first month of listing till the latest month, which is July 2025. Don't worry, I have not shown you the price chart, but I'm showing you the volume chart. The volumes are at an all-time high. You can see this crazy volume buildup. This is higher than any of the previous month volumes, and very important is that this is just the July volume candle, and as I shoot the video, it's 11th of July, so almost 20 more days left in this month, and this is already making some, this is catching the attention of a lot of eyeballs, and not only people like you and me, but also the exchanges. So if you can see here, BSE Limited, their surveillance team had asked for a reason as to what led to this spike in the volumes. If you want, you can just pause the screen, read whatever is there. This is a reply from Relaxo to Bombay Stock Exchange's surveillance team. The main part here is that they are saying that whatever is the movement in trading volume of the company's security in the recent past appears to be purely market driven. Okay, we trust the above clarifies the matter. So to be honest, even I don't know what is going on. They have said that this is a purely market driven thing, so it'll be really interesting to see what's up next for this stock. So we are going to learn about this in much more detail, but in the coming sections of the video. Before we dig down into the details, let's understand absolute basics as to what does the company do. Of course, the name itself suggests it manufactures footwears, okay? But it started back in 1976, and today it's one of India's largest footwear manufacturers. I'm sure you might have heard about a few of their key brands, something like Sparks, Hawaii, and Flight. And if I were to talk about their production capacity, currently they have a production capacity of 10.5 lakh pairs per day across 9 facilities in Haryana, Rajasthan, and Uttarakhand. So I think they have definitely made a name in this entire space of footwear. If I were to understand, if you were to understand about the distribution channel, they have pan India roughly 650 distributors, 70,000 retailers or multi-brand outlets. I hope you know the concept of a multi-brand outlet versus an exclusive brand outlet. That is an MBO versus an EBO. What is that? MBO is basically a shop which sells multiple branded footwears. So for example, a shop which sells Relaxo brands, something like Sparks or Flight or whatever, they will also sell Bata's brands, they will also sell Hush Puppy brand or whatever. That will be called as a multi-brand outlet. But then what will be an EBO or an exclusive brand outlet? The name itself suggests there will be a shop which will sell only Relaxo Footwear's brand, something like only Sparks, Hawaii, Flight, and all that. Okay, so I have given on screen what are the numbers for MBOs as well as EBOs. They also export to roughly 36 countries. They have one overseas office in Dubai, and they are also available on a lot of online platforms. So in the next section, what are we going to focus on? We are going to focus on what led to the massive rally in the stock, and followed by what led to a massive fall in the stock. Now comes a very important part of the video because we are going to understand what led to a massive rally in this stock, almost 100x rally from 2011 to 2020. But you might be like, Rachna, why are you going so much back in time and why are you analyzing a stock like in the previous decade? Uh, in Hindi, we say, na, gade hue murde kyun khad rahe ho? Well, there is a reason behind that. I feel that whenever we were to analyze something, we learn one new point at least in every stock analysis. So, whenever people ask me this question, that Rachna, what leads to a PE re rating in a stock? I think this can be a very good example to understand as to how can a stock be a good candidate for a PE re rating. What I learned from this whole case study is that if there is a story and everyone believes in a specific story, that yes, XYZ things could happen because of which there could be a dream rally for this stock, that is where the interest starts flowing into this stock. Okay. But what was the story behind the PE rating? Let's understand one by one. I'm going to tell you 4 or 5 points. And if you feel that you know few more points, please let me know in the comment section below. Right. First things first, I believe that the point was strong structural consumption story in India. As I mentioned, the brands like Hawaii, Sparks, Flight, many people felt that these were the right fit for the then rising middle class. People felt that even the rural consumption story is really strong, and that is the reason why the demand for these footwears would crazily increase. Did that happen? Yes. There was a surge in the volume, it was growing consistently, and not only the volume, the type of footwear being sold was also seeing a change. What do I mean by that? The overall shift from unbranded footwear to branded footwear was kind of visible. A lot of people started to feel that this is just the beginning of the story. Abhi to party shuru hui hai. More and more people will shift from unbranded to branded, which will lead to one more important point, which could be premiumization. That's where the start of hopes for premiumization start to kick in, and people believe that even though this company is actually serving a lower middle class or a middle class, still because of the aspirational value, they will be able to push the consumers to shift to higher brackets. They will be able to suck more profits from them, is what the story was being built. Everyone felt that yes, premiumization will happen, the demand will stay afloat, and with rising demand they will have to manufacture more and more footwears. And for that, what was required is capex. Did they increase their capital expenditure? Yes. But what was required is that with growing capex, the manufacturing should have increased. With manufacturing, the sales should have increased. That is what the hypothesis was being built. Did that happen or not? We are going to understand that. But was there a good capex growth? Yes. Was everyone happy with the story? Yes. And that led to an amazing PE re rating in the stock. The stock which once used to trade with a PE back then, I'm talking about 2011 something, the stock PE was somewhere around 11, and at the peak, the stock PE was around 148. But then after that, the stock started to crash. So we are going to understand what led Relaxo from a relaxing time to an unrelaxing time in the immediate next section of the video. Now we are going to understand top 5 reasons for the downfall in the stock. The stock corrected by more than 70% from 2021 to 2024. Now we are going to understand that what leads to a downfall in a stock where so many people have actually bet for it. See, whenever a story is being built, there are a lot of assumptions which are there as an underlying thing. And if the assumptions don't turn into reality, that's where the stock price starts to crash. Okay. So, as I mentioned, I'm going to talk about top 5 reasons. If you feel that there were more reasons for that, for the downfall, please let me know in the comment section, right? What was the first and foremost point that was being assumed? The rural consumption story, the growing aspirational value that more and more people will buy their chappals or their footwear, their sandals. That was the assumption, right? Number one. Number two assumption, if you remember, premiumization, that they'll be able to sell at more and more costs. They'll be able to sell at more and more price, basically. Did this happen or not? So for that, I'm going to take you to screener and let's understand one point about sales growth. So if you see from 2014, you can see there was a double digit sales growth barring 2017. You can see 20% growth, 22% growth, 15%, 19%, 18%. The first hit was taken during COVID. It was a 5% single digit sales growth, followed by a minus 2% sales growth. They recovered here in 2022, but then have a look at this: 4% sales growth, 4% sales growth, minus 4% sales growth. Oh my god. With double digit early 20, early 20s ka growth, 2022, even mid teen growth, to a single digit sales growth. It means that whatever they had planned, that never actually kicked off, it never flew, especially post COVID. The rural demand actually dried up. We did read a lot of news articles on that as well. This was the main pain point, that discretionary spending took a hit post COVID, and that is where their sales numbers started to drop a little bit. Okay, the volume basically. Now, one more point was that they had actually felt that okay, they'll be able to sell more and more premium products as well. Now, whenever a customer says that okay, I want to go for more and more premium products, for this company, for Relaxo, one of their premium products is Sparks. Okay, by the way, we have taken this screenshot from Amazon. This is the latest data, but I'm giving you an example on how to analyze, right? So, if I am a normal consumer, I can say, okay, Sparks is one of their premium products. It's available at 1,249. Right by that, by the side, you can see Hush Puppies, which is a premium brand, and their sneakers. See, I've compared sneakers versus sneakers. Their sneakers are available at 1,225. So this is 25 rupees cheaper, and also a little bit more luxurious brand. Perceived value is more in Hush Puppies. So could that also hurt the financials? Answer is obviously yes. Okay. Is there one more impact for the lowered sales growth? Yes, and that was GST. If you know, I think in 2022, the GST rates were increased for footwear which is below 1,000. Earlier GST rate was 5%, and that was increased to 12%. And any footwear where the price is above 1,000, the GST rates were then were increased to 18%. Now, what could happen because of this? See, we are talking about a consumer segment, a customer segment which is really, really price sensitive. So the moment the prices of these footwears increase, there could be two possibilities. Number one, they purchase less often. They might go to the cobbler to mend their shoes and chappals more often rather than buying fresh pairs of shoes or chappals. And possibility number two, they could shift from branded products to unbranded products. What will hurt? The company's top line is definitely going to hurt because of that. Now, the problem was not only the top line was hurt, it was also the raw material price which increased, and which also took, which also impacted their operating profits. So, I'm going to give you an example of rubber. Of course, to make chappals, it is rubber, some different types of plastics as well. I'm not going to show you for each and every commodity, but just to give you a guideline as an example. Okay, now if you see here, rubber as a commodity, from October 22 to September 24, you can see continuously the prices of rubber has increased. Now, can we see the impact in the operating profit margin as well? Absolutely yes. You can see here the operating profit margin had climbed to 21%, but post that it sharply dropped to 16%, then to 12%, then to 14 and 14%. But you can imagine a stock which is commanding a super high PE. I told you the PE was around 150 back then in 2021. For such a company, if your operating profit margins are dropping like anything, will the PE re-rating happen in a negative way now? It could happen, right? We are going to talk about PE re-rating in the coming section. But before that, also let us understand that had they thought of an increased demand, yes, because of which, if you remember, they had done more and more capex. Now, what could happen with a higher capex and with a sluggish demand? Could their overall capacity utilization also drop? And did that happen? Answer is yes. Now, if you see here in 2020, the overall capacity utilization stood at 70.7%. And from there, look at the next 4 years, capacity utilization dropping crazily from 70% to 48%, 47, 46%, 50%, and again 46.45%. Please understand, a lower capacity utilization means that the company is definitely going to take a hit on the operating profit. See, operating leverage then starts taking a beating if the capacity utilization is not going to be up to the mark. Whenever you are increasing the capex, the fixed costs are going to be high up, and if you are not able to increase the sales, it's not going to be good for the company, right? Because of all these points, did their financial performance go on depleting? Yes. You can see our operating profit margins, which I did talk about. The net profit margins also took a hit from 2021. You can see net profit margin, which was around 12.3%, went down to 8%, 5%, 6%, 6.1%, continuously going down. ROC, which was around 23.74 back in 2021, it came down consistently to 11.44% to 13%, and again 11.1%. ROE also was going down from 18% to a low point of 8.33 to 10.02, and finally to 8.31. So all in all, you can see that the financials took a hit, and needless to say, what is going, I mean, immediately where can we see the reflection? We can see that in the PE. I'm going to take you again to screener, and you can see here the max price, I mean the max time frame, and you can see here the PE, which zoomed up like anything, corrected like anything. But the funny part is that even if you're checking a max time frame, even today, you can see the PE is at 73 versus the median PE is at 44. So in spite of all these things, it is still well above its median PE of 44. Let's move on with what lies ahead. And for that, I checked the management commentary. Management still believes that they will be able to crack the premiumization of their products. They will be able to bring the cost under control, and because of which they feel that they'll be able to expand the margin by 100 basis points. So basically, they're targeting a 1% expansion in their margins. Okay. Number two, they have also launched a Relaxo Parivar app to increase their sales. Because if you remember, I told you one more pain point was what? One more pain point was their sales growth. They said now with the Relaxo Parivar app, they can directly connect with their retailers. And currently, they are connected with 60,000 plus retailers who are buying from the company directly in bulk on a regular basis. So they are saying this Relaxo Parivar app is currently covering 50% of Relaxo's sales. Okay. So I think 2 points understood till now. Number one, sales growth problem. They are saying Relaxo Parivar app can play a good role here. And number two was their margin pressure. For that, they are saying that because of premiumization and cost efficiencies, they intend to increase the margin by 100 basis points. And number three, they are saying that we are also focusing on product development and quick commerce, where they are saying that we'll ensure that our e-commerce portfolio is properly tailored as per the consumer preferences. So whatever is trending, whatever is being demanded by the customers, that is what they are actually focusing on for online sales. And they said that they are also tying up with major quick commerce platforms for increasing their sales. Again, as I mentioned, this was an entire effort from my side to tell you about top 5 reasons why the stock surged up. The whole intent here was to tell you about a P re-rating of a stock. Number two, we focused on 5 points what led to a downfall. And number three, we talked about 3 points for what lies ahead. Of course, we have taken everything from data which is available on through something like annual reports, management presentations, con calls, all these basic pointers. So I hope you enjoyed today's case study. If you did, please don't forget to smash the like button. Please don't forget to share this video with your friends. I'll see you in the next one. Till then, take care. Jai Hind and bye-bye. You might have come across such advertisements on various social media platforms. Please note, all of these are fraudsters promising unbelievable returns through stock tips. I don't provide any calls or advisory services. I provide only educational content through my social media handles and through my website rachanaranade.com and rachanaranade.in.